Hi all, we are Team CPI and are excited to present our analysis of changes in consumer behavior pre, during, and post-pandemic, as measured by CPI, basket weights, and retail prices. Thank you, Vancouver Datajam, for this opportunity, and thank you, Fateme Aydin, Laura G. Funderburk, and Lisa Cow for this project idea. So now, a little bit about the project. This project aims to study trends in consumer behavior for various products and services during the pandemic. This project focuses on changes in consumer price index, basket weights, and retail prices. We aim to investigate how shopping behavior has changed, how prices varied, and whether there was a logical relationship between the two. Our data was collected from Statistics Canada under the Statistics Canada license and can be found by following the provided links. Thank you, Statistics Canada. Before we begin our analysis, we would like to define CPI as defined by Statistics Canada. CPI is an indicator of changes in a consumer prices experienced by Canadians. It is obtained by comparing, over time, the cost of a fixed basket of goods and services purchased by consumers. It is a popular economic indicator used to provide insight into economic conditions and purchasing patterns. We decided to tackle understanding consumer behavior by looking at what areas were affected most during the pandemic, for example, transportation, food purchases, etc. Whether these areas had higher or lower demand, how prices changed on these products, and whether there was a relationship between the two. We broke our analysis into three parts, pre, during, and post-pandemic, by taking into consideration three important dates. December 31st, 2019, as the day the first declared case of COVID-19 worldwide. March 16, 2020, when Canadian borders closed, and July 19, 2021, when border measures were eased and over 50% of Canadians had been fully vaccinated against COVID-19. Now that we knew which time zones we were most interested in, we performed exploratory data analysis on our CPI, basket weights, and retail prices datasets. Let's start talking about changes in Canadians' Consumer Price Index. When the lockdown was right around the corner, Canadians were already adjusting their monthly expenditure. The consumer basket weights for food, rent, and shelter were on an upward trend, which persisted after the lockdown. Transportation, recreation, and car purchases, on the other hand, were already on the decline, and they fell even more following the lockdown due to work from home, remote learning, and the shutdown of extracurricular activities, movie theaters, concert halls, galleries, and libraries. Household furniture and equipment, rent, and homeowner expenses went up as more Canadians began working from home and performing home renovations or buying home gym gear. We see the same trends continue into our post-pandemic period. Moving on to basket weights. We see two main spikes in basket weight proportions, one in March 2020, which is consistent with when borders closed and COVID-19 was classified a pandemic, and one in November 2020, which is consistent with Canada's second wave peak. We mainly see customers stockpiling livestock, dairy, eggs, and vegetables. We confirmed our results by finding news coverage that covers these panic buys for the March 2020 and November 2020 time period. Retail prices. We see peak price spikes for meat products. The chart shows spikes in prime roast rib, sirloin steak, round steak, and other beef products. Investigating this spike, we found that there were meat shortages due to shutdowns of slaughterhouses and meat processing plants, and Canadians began panic buying due to fear of shortages. This increase in beef demands led to atypical increases in prices of beef, as confirmed by Statistics Canada. We wanted to see whether meat prices were correlated, so we investigated meat pricing relationships for the 2000 to 2021 and also the 2019 to 2021 periods. We see that in the 2019 to 2021 period that beef products do not correlate with the price of other meats as compared to our overall 20-year trend. Because of this, we recommend Canadians to substitute chicken for ground beef to save money, as these showed a negative correlation in pricing for that 2-year period. We also see that the average prices for cigarettes and regular unleaded gasoline saw a lot of fluctuation in their prices. We can see that right at the beginning of the shutdown, there was a sharp drop in fuel prices for all major Canadian cities. As we all have seen the horror and panic buys in grocery stores, we also came across bootleggers who were selling toilet paper and sanitizers at higher prices. While Canadians were stocking on items Supermarkets observed a 9 million in sales for the month of March, although it continued during the lockdown, but that was mostly due to lack of raw materials and inflation. Liquor sales. Wine, beer, and other alcoholic liquor sales also grew during the month of November and December with holidays, but Canadians kept the numbers high during the summer as well, as we saw lockdown rules in Ontario, Alberta, and BC were somewhat relaxed. Fun fact, British Columbia's went ahead and helped with the numbers by about 27% compared to its previous years. Saving the best for last, we have our time series analysis, where we try to understand trends in CPI of food in the past 10 years, draw inferences, and use machine learning to accurately predict how food CPI will look in the next 12 months to help consumers accurately plan their purchases. Visualizing CPI data of food in the past 10 years in a line graph shows a clear constant increase in value before and during the pandemic. CPI growth has shown consistent growth, rising to 3.3% in 2021. Breaking down the data even further, we divide CPI growth by year. The graph shows near constant growth each year. But it is interesting to see that 2020 recorded the lowest levels of CPI growth compared to the last 3 years. To identify patterns in the time series, we break the data into blocks plots. Year-wise plots show the overall trend, and month-wise plots show seasonality. We can infer that seasonality shows high CPI values in the winter months of November and December, and low CPI values in the summer months of May and June, indicating the rise in retail prices in winter months compared to summer ones. In order to get the model to work, the time series was then decomposed into level, trend, seasonality, noise, and lag. Tests were conducted to make our time series stationary. We used both smoothing and moving averages to do so. After that, we imported ARIMA, short for Autoregressive Integrated Moving Averages, a class of models that explains a given time series based on its own past values, that is, its own lags and the lagged forecast errors. The model was imported from Stats Models library and was made to fit our data. Forecasting using the model for the next 12 months was the final part. We had to make some assumptions. That the data is normalized, that 2010 to 2018 are treated as normal non-pandemic years, that 2019 to August 2021 are treated as pandemic years, and that the accuracy of the imported model was relatively high. The results that we can infer from this model are that, assuming that the model is correct, CPI growth in food will continue to rise, seeing high CPI values of food in the first 3 months of 2020. Furthermore, additional regression models were created and tested to make predictions for other key industries like clothing and footwear, transportation, housing, and additional household purchases. We ran into some challenges and limitations along the way, some being that our data collected was in different formats and data time periods did not align. Pre-processing took a bulk of our time, and we had to normalize our data as we were unable to find a detailed dataset that provided the prices for raw materials. And last but not least, thank you, Vancouver Datajam, and thank you, team.